one of the statistics that really blew me away, and you're talking about, you just need a little JavaScript. I presume this is still the same thing to this day. The largest number of people connecting to the Intercontinental Exchange who connect to you directly are actually connecting through web ICE. They're connecting through a browser. They're not connecting through ultra low latency, high frequency, amazing dongle-licious technology.
It's the way we built the market. Is meant to serve commercial users, and you can see it in the commitment of traders. We actually have a very different client base than our competitors, especially in energy. They connect through web ICE, and it is a very democratic thing to be able to offer someone the same access to trade in Houston as in New York, or in my hometown in Natchez, Mississippi. So that to me is cool.
It's all about trying to make the biggest possible market with the most people involved. And if you're not aware of what the Commitment of Traders report is, which I think everybody who's been a commodity trader knows all about, it's something that's produced weekly by the Commodity Futures Trading Commission, and it actually explains the kinds of holders of different commodities. So therefore you can actually see who are the mainstream commercial interests, who are speculators, and therefore you can get an idea of how that market is made up. And that's something, as you say, you've always managed to keep ICE very close to the actual producer end of the market. I mean, the actual commercial end of the market for producers and users.
And we talked about building a market, and I'm super excited to hear about what you're doing. But one of the things you do is you have to really reach out to the commercials and the producers all day long, get market makers to trade with each other. And you need those. They're great partners in the market. But unless you get a commercial user to do something that is very hard for them to do, which is put a resting bid or offer into the market, you will not build that market. Resting bid or offer is them giving a free option to someone else. So they have to be incentivized to see that market succeed, no matter what incentives I do there.
And it's interesting because, I mean, you look at historically the sort of breakdown of all futures markets. I've always been shocked because about 1 in 3 trades, if you're lucky, tends to go to commercial participants. So the actual people who are fundamentally involved in whatever the underlying commodity is, and that can even be money when you're looking at financial futures, 65% is essentially very often very useful noise, but it is noise. I mean, it's low latency, it's arbitrage, it's this, it's that, the other, but it's not actually fundamentally promulgating the economy.
Right. So one of the great things about actually having agricultural markets, and my background is actually closer to cotton, so I'm very close to that market, but we spend an inordinate amount of time with agricultural customers because their livelihood depends on the price signals that we send. And I have to take that job extremely seriously. And the person who will take over from me and the new exchange heads across ICE, it's one thing I'm going to remind them. I said, it's great to go out and meet with a bank, and banks are very, very important to my market, but you really need to sit down and listen to the people whose every day depends on the price signal we send out. It's a sacred thing, and you cannot mess that up.
A sacred thing. I think that's a great takeaway altogether.